Oh, okay, here we go. Hello, everybody. Welcome back to the weekly outlooks. How's everybody doing? Wait a few seconds here, make sure the stream is good. What's going on, guys? Happy end of 2020. Let me see in the chat. Can you guys hear me all right? What's going on, guys? We are back. Just gonna wait a second and make sure the stream is good to go. Awesome. Okay, let's go ahead and jump into things, guys. Welcome back, everybody. I know it has been a while. I believe the last weekly outlook that I did was in March of this year. So much has happened this year. I hope you guys and your families have been safe. I know 2020 has been a wild year. For some, we might say it's been our worst year of our lives, but at the same time, it's also been the best year of our lives, right? 2020, the year of 2020 vision. I think a lot of things were exposed to us and really prepared us for 2021. So thank you guys for so much support. I received a tremendous amount of messages over the past couple of months. So many people wondering where these weekly outlooks were, and I've had such an overwhelming amount of support that I decided, hey, I'm going to bring these back. I'm going to start doing these. And matter of fact, I'm going to commit to doing one of these every single week in the year of 2021. So I was partly considering starting these not until the beginning of January, but I decided there's a couple moves that I want to share with you guys. If you guys follow me on my Instagram, I've kind of been hinting at them, but I want to give you guys all a little bit more clarity of what exactly I'm looking at. I'm in about a week here, not just a week, but this week also, there's going to be a lot of movement in the market. So we haven't even done a live session together, a weekly outlook together since the start of COVID. Actually, right when I was ending these outlooks is when COVID really hit, and a lot has happened since then. So I just want to start it off. You guys know the drill. Start it off by looking at the economic calendar. But I do also just want to say, if you're watching this right now and you are not subscribed to this channel, make sure you take a minute and smash that subscribe button and turn on the little bell notifications so that way you get notified when I go live. Because like I said, I do plan on doing one of these every single Sunday between now and the end of 2021 at least. So got a lot of things to bring to the table. Obviously, too, over the past 8 months that I haven't done one of these, about 8 months or so, my trading strategy has also improved. So I'm really excited to bring that to the table, bring a couple different things to the table. I'm also considering, let me know in the comments section, let me know by leaving a like on this video if you guys would like me to do maybe a couple live stream New York trading streams. All right, I've gotten a lot more into the London and New York sessions. If you guys know how I traded previously, it was mostly, whenever a setup is there, we take the trade. And I still definitely have that mentality, but I've really been, exposed and focused on the moves that are created during the New York session. So I'm considering maybe doing, 1 or 2 live streams a week on during the New York session as well. So appreciate you guys for hopping on here. Appreciate so much support. That's awesome that this first live back is getting so much support. Thank you guys all in the chat, and let's go ahead and get started. So we're going to kick it off. You guys know the drill. I still start off with the economic calendar, and I just want to point out a couple things on here. Also, since this is the first stream back, I realized that I don't have my annotation tools prepared, so I will be having those ready for you guys next week. So for now, just try to pay close attention to my cursor, okay? Because I'm going to be, and I'll actually highlight them on here. So just a few things that I want to point out, okay? First thing is I've kind of changed the way that I do things with the economic calendar. You'll notice that I've sorted out all of the medium and low impact news, so that way we can just get right into the juicy stuff and see all of the high impact. There's a bunch of PMIs to start off this week. Actually, today, the rest of today, Monday and Tuesday, there's nothing. Wednesday, though. Wednesday, we have the last Fed meeting of the year. Okay, these happen 8 times a year. It's happening on Wednesday afternoon. So they're going to be releasing their economic projections as well as a statement, as well as a press conference from Jerome Powell 30 minutes after. All right, so I'm expecting them to announce some more QE, okay, some more bond buying. We've seen the Fed really step into the limelight of QE this year, especially with COVID back in March, right? Just to briefly touch on where kind of rates are at right now, we see a lot of central bank rates near zero, okay? And this is a very different picture than where we were a year ago, okay? Obviously, due to COVID, we've seen a lot of countries want to, raise their inflation to step up the spending, and so we've seen a lot of interest rates tank. And matter of fact, if we just look at the U.S., for example, let's go ahead and just pull up the chart of what we've seen this year. So when we last left off, guys, it doesn't seem like it was that long ago. It's really crazy how fast time flies. It really seems like just yesterday I was doing that last weekly outlook in March. I didn't know it was going to be the last one either, right? A lot of things happened in my life offline this year that had me take a step away from social media. But again, thanks to your guys' support and your guys' just overwhelming support, there's really no other way to put it, I decided to start these back up. But we did see, okay, if you guys remember, so March 3rd, there was an unforecasted Fed meeting and they dropped interest rates by 50 basis points, all right, from 1.75% to 1.25%. Of course, that's a floating with a 0.25% in there. That's why we see the less than. So that was that in March. And then less than 2 weeks later, we saw an unprecedented event. We saw the Fed drop interest rates by an entire percent, all right, a whole 100 basis points. And they've stayed right there since March. Okay, there's been about 4 other meetings since then, and they have decided to keep interest rates right where they're at between 0 and 0.25%. Now, if you guys have been following up with the statements from Jerome Powell or listening to any of the comments that he has been making on the federal funds rate, he has actually said that interest rates, he does not forecast interest rates going back up until 2023. Okay, so this leads me to believe that the dollar is going to begin to weaken. Okay, we've already started to see a weaken. Matter of fact, if we look at the dollar index, okay, we can go all the way back to where we were. And you guys remember this? We were in this channel right here from July of 2018 until just a little bit. We had this lot of volatility in March with these interest rates, and it stayed back in this range until about May, and then late May, we saw a break of this massive consolidation that we had been in for almost 2 years and a big drop to the downside, okay? Now, in my opinion, this was kind of free money. This was easy money because, if you guys remember, and if you don't, if you're new here, that's all right. We'll go over it just very briefly. I'll go more in depth on it on another on another webinar in the future. But just know that interest rates going up are generally going to be positive for that currency. Okay, interest rates going up, that means that we're deflating the economy, so that's inherently strengthening that currency. Now, we saw the opposite of that happen in March. We saw them cut interest rates, right? We saw that right here, March 15th. They cut interest rates by 100 basis points. So those of you guys that do add this fundamental approach to your trading, you're going to benefit greatly, because you would know this big green candle is actually that week. This was the last week that the dollar really had its strength, right? Looking at the dollar index. So ever since then, we made a high for the year in March of this year, the second week in March, actually the third week, going into the third week of March. And then since then, we have just seen a massive, massive devaluation of the dollar. We've moved on the index from above 100 point, where it started at actually 100.00, all the way down to 90. Okay, so a very big decline. And if you don't know this, I'm sure most of you guys, the veterans in here, you guys know this, that Euro USD does the opposite of the dollar index, right? They have a negative correlation to each other. So we've seen exactly the opposite this year, right? That week of them changing interest rates, dropping interest rates so dramatically, that caused a massive deflation, or a projected deflation to the US dollar, okay? Let's also not forget a couple things. You know, there was a $2.3 trillion COVID stimulus bill that helped kind of induce this deflation at a much quicker rate. And that's actually something I want to talk about, is the upcoming stimulus bill. So that is that. So we've seen, and I'm expecting this to continue to drop. Okay, I guess we'll touch on it very quickly, that there is another stimulus bill coming out. Okay, it's going to be another multi-trillion-dollar stimulus deal. Whether you like it or not, it's coming out. Okay. Now, I don't have all the exact figures right now, because those figures are changing as they, get moved through the Congress and the Senate, but it is being decided, how much that amount is going to be, how much each person is going to get. But do know that there is another stimulus bill coming out. Now, I don't say that I don't say that as a good thing. I don't believe in free money. While it might be great initially, free money is not free. Okay, we're always going to pay for it in other ways, whether that's higher taxes or lower wages, whatever it is, we are going to pay for it. Okay, higher inflation. And that's what I'm expecting the dollar to do. I'm expecting the dollar to continue to weaken throughout 2021. Okay, this means that it's going to be good for things like gold. Okay, it means it's going to be good for things like Bitcoin. Okay, we're going to get to all of those in just a moment, but that is my projection. I do want to throw that out there, that I always give this disclaimer. Usually give this disclaimer at the beginning. That do keep in mind, guys, that what is presented in these live streams is just my opinion. Okay, it should be used for educational, informational purposes only. This is not investment advice, okay, or investing advice. So let that be known. But the fact that Powell has definitely said that he's not expecting interest rates to go up anytime soon, at least, let's call it, we're almost in 2021, so at least for another 2 years, 2.5 years, I'm expecting the dollar index specifically to drop. So we should see Euro USD continue rising. Okay, so that's the first thing this week on Wednesday. I'm going to skip over a couple of these other things and just get to some other key things. We have an employment report coming out for Australia this Wednesday afternoon also, or Wednesday evening, depending on where you're at. Okay, so this should be interesting. If you guys are day trading the Australian dollar, the Aussie dollar, this can create a good day trading environment for us for, very, very short term, quick in and out of the market, depending on what the numbers print out on Wednesday. And then Thursday, we have an interest rate decision from the Bank of England, okay, for the pound. Now, I do briefly want to talk on the pound, but not too much. I just want to kind of talk about it like this, okay? And matter of fact, let's just bring up the charts. Let's go talk about the pound dollar very quickly, okay? So let's look at the pound dollar, okay? The pound dollar, and if you guys are in my Telegram and my free trading group, and if you're not, the link is in the description below. On Friday, I did post, matter of fact, let me actually just pull it up very quickly. Just for just a moment. Let me go ahead and pull this up. All right. And we posted this and this. All right, so I posted this on Thursday evening. Okay, you can actually see it time-stamped right here. That's Thursday afternoon. And it was actually just after the daily candle closed. You'll see the daily candle had just opened on the pound dollar, and we were sitting right around the 133 handle. I put in a quick little forecast just because, well, mostly from a technical perspective. Okay, we had a nice top formed back here early December, just about a week and a half ago, and then a very strong bearish engulfing candle the day prior on the 9th. So I really liked this setup for in terms of technicals, but I also, had a very light Brexit bias on this, expecting Brexit to weaken the pound, because I am biased. I'll just let the cat out of the bag with this. I am biased to a no deal Brexit. And just to kind of catch you guys up to speed with Brexit, right? Brexit, Great Britain officially left the EU, the European Union, in January, but they've had until December 31st, so less than 3 weeks away, to finalize negotiations, right? And decide, to put together some sort of negotiations, trade deals, etc., on how the Great Britain was going to function in relationship to the European Union. Now, obviously, we haven't seen a lot of headway this entire year, and I don't forecast that they're just going to magically come to some perfect deal in the next 3 weeks. So I am expecting a no-deal Brexit, which would be pretty bleak for the pound. Okay, it would not be very good. Okay, so I'm having a fairly dovish tone when I talk about the pound right now. I personally have not really touched the pound too much. Even the pound dollar, really haven't touched that too much this year. So yeah, that's my outlook for the pound. Is I'm expecting, I was expecting it to drop, and then we can see a nice little follow up. Now, I took this screenshot a little bit late, but you guys can see that there was a pretty solid move. And in that move, this is on the daily chart, keep in mind. So from where I drew this arrow dropping at about the 133 handle to the lows of that day, it's about 150, 160 pips. So bunch of free value for you guys dropped straight into that Telegram. And if we look at the current state of the pound, I have added in my moving averages here just a moment. This is the 50 EMA as well as the 100 EMA. We found a little bit of a support around this area. We definitely saw the market gap a little higher. I know some of your charts, this is a feed directly from Oanda, so you may not have a big green candle. It's likely on your charts just a gap. Now, I am expecting this gap to fill. I am expecting the pound to weaken. Again, a no-deal Brexit would be fairly negative for the pound. Okay, so I do see some major downside coming in on the pound, and really, what does it for me, guys? Okay, I mean, there's some nice technicals going on the weekly, but if you guys also, I posted this in the chat, but I posted, let me actually just go to it very quickly and let me pull it up, and here it is. Okay, I posted this. Now this is the UK 10-year bond yields. Okay, so this is our 10-year bond yields for the UK. If you aren't very familiar with bond yields, know that bond yields going up is actually going to be bad for the pound. Okay, bond yields going down is going to be good for the pound. Okay, the best way I can explain bond yields is that, in layman's terms, is that when bond yields raise, okay, when the government raises the bond yields, that means the own government, in this case the UK, they aren't even confident in their own currency. So they feel like they need to incentivize people with a higher yield to give them money to borrow. So they aren't even confident in their own currency. So this is purely technical, right? Just some basic chart patterns here, but the key is that these two colored boxes, the respective boxes, they are the exact same size. Okay, if I actually go to the live chart and pull that up here, okay, if I just move this over, right, and I put this right over it, these boxes are the exact same size as you can see right there, okay? And same thing goes for the orange box. So if I bring this orange box over right here, okay, same exact size boxes, nothing has changed. So, you know, I am both a combination of a fundamental and a technical trader, but I do observe technicals when they are clean, right? It's kind of hard to define simply what clean means. I'm sure most of you guys on this call that have been following me for a while know what I mean when I say clean. This price action is very clean on these bond yields. So I'm expecting, and more so, right, on top of everything, right? Let's just take out everything and look at the naked chart here. And we can see last week closed extremely bullish for these bond yields. Okay, now this week is definitely going to set the tone for what happens. All right, we're either going to continue rocketing off here, or we're going to find some resistance from this channel that we've been in. Okay, I am biased towards the first idea of the bond yields continuing to move higher. Okay, so yeah, let's keep an eye on the pound this week. Definitely trade it with caution, being that it is getting closer to the Brexit negotiation deadlines. Okay. So the dollar overall, just to kind of recap with the dollar, right? Because it's been a while since we talked last. Okay, because the last live session that I did with y'all, we were still in this multi-year range. Okay. And those of you guys that have been with me for a while, right? I've been doing these weekly outlooks since 2016, 2016 is when I first started these weekly outlooks. All right. And at that time, you guys can, I have there's about over 100 videos in my video history. And if you are so inclined to, you can go back and you can see that these levels, okay, this level at 100.50 and 93.2 have been on here since those webinars, okay? And I have just continued to extend this range further and further and further, even though at times it didn't seem like it meant anything. It actually did. So we saw in March a lot of resistance in this area, right? Just a very strong supply for the dollar index. It seemed just about any time that the dollar index got above this range, we saw a pretty sharp move to the downside. Now, since we've met, right, through the summer of this year, we saw a very big decline on the dollar, and we just spoke on why that happened, right? The inflation due to the Fed cutting interest rates that caused a massive drop in the dollar. And again, because it's not forecasted for interest rates to go up anytime soon, I am still expecting the dollar index to continue to fall, okay? At least to this level first, right? Kind of a wait and see approach. I like to wait. I like to see the market drop to this area, then evaluate price action and see if we're going to move lower. But I am expecting the dollar index to move lower. Now, short term, this week we may get a little bit of a bump, a little bit of support from the dollar bulls. Okay, we can see on the daily we are creating a bit of a bottom in this area. Okay, we can see that there has been quite a bit of support found from buyers in this area. So we may get something that looks like this, but I am expecting us to go lower. Okay, if we do have a bit of upside, I think it's going to be pretty much capped around this area right here, and then we'll see some downside. Okay, either that or we're just going to continue to plummet lower. Okay, either way, I'm expecting the dollar index to continue falling. Okay, so this is just kind of on my horizon. Now, here's the move that I really want you guys to pay attention to, okay, because we're about a week away from the price action starting to form, and it's on gold, okay? And it is based off of the seasonality of gold, okay? So going just full disclosure on that, history has a tendency to repeat itself, but that may or may not be the case this year. We're going to have to see. Okay. Also, before we get into things, I do want to mention that who remembers when I called gold hitting $2,000, right? I actually had posted it in the Telegram, in the free public Telegram. The link is in the description below. I had called it back in December of last year, and you guys are more than welcome to go through there and scroll up. I think I posted it about December 12th or December 14th of last year. I said gold will hit 2,000 in 2020. I hope some of you guys capitalized on that because we did see gold hit all-time highs in August. Okay, we reached actually, let's see, the highs of that week, $2,075. Okay, all that was breaking the previous all-time highs back in September of 2011, around 1920. So we did it, and I will tell you guys, I'll be the first person to tell you guys that my outlook for gold moving into 2021 is also bullish. Prosper says my volume is low. Is my volume low to you guys? If it is, I can turn it up very quickly. Let me know if maybe it might be just something on your end, Prosper. Maybe just turn it up a bit. But if you guys are saying it is low, I'll go ahead and turn myself up. Okay. And thank you. See, Rika, you said love your breakdowns, bro. I swear, I appreciate it, guys. I really, really appreciate the support. Okay, so let me go over gold very quickly. Let me also make sure you guys can hear me. Let me know that you guys can hear me in the chat. I want to make sure that you guys are getting this. But I'm assuming there's only one person that said it. It's okay. All right, maybe I can. It's fine. Okay, cool. Here we go. So I just want to show you guys something, okay? Here is an observation on gold, okay? And I actually had mentioned this last year in 2019 going into 2020. But let's go ahead and look at write this in your guys' notes right now, okay? December 20th to January 10th, okay? About a 21-day period, all right? And we aren't just going to be looking at 1 year of data. We're going to continue looking at each year, okay? So I'm going to very quickly go through this, but look at what we have seen about the last week and a half of every year into the first week and a half of the new year, okay? The end of the current year into the beginning of the new year. We have a tendency to see a bullish run on gold. So this was 2019, December 20th, 2019, moving into January 10th, 2020. We go back and we look at 2018 to 2019, same thing, December 20th to January 10th, very nice rally in gold. We look at 2017 moving into 2018, December 20th to about January 10th. Okay, we see a very nice run in gold. And this isn't just, a small move, guys. All of these moves are pretty big, right? This is 1260 to 1326, a $60 move on gold, right? This was a $56 move on gold, right? Last year was a $150 move on gold. So these are where you're really going to find your quality over quantity traders. And there's a really good book. It's called Market Wizards. Okay, I would recommend that you guys all check out that book when you get a chance. And it's basically a collection of interviews with traders. And it reminded me, if you guys know Austin Silver on Instagram, I was actually watching a clip from him, and it reminded me of one of the sections that he was also talking about. And in one of these chapters, he talks about he's interviewing a trader that talks about unicorn trades. Okay, and he talks about how these trades, like, guys, trading is not about trading every single day, right? I would strongly advise, if you have like a daily goal, you're like, I want to make this many dollars or this many pips or this percentage per day, you're going to find yourself having to force trades, and you're going to find yourself falling into the emotional side of trading. So really focus on your strengths, focus on what you're good at, and really implement that and compound those trades, okay? Because if you really focus on these unicorn trades, these really quality over quantity trades, you can eliminate a lot of the noise and eliminate a lot of the losses that you might have. That a lot of us traders, we tend to go in these cycles, our first couple months, first couple years, depending on how long, it takes for you to click, and it takes things for you to click. It takes things to click for you. But anyways, moving forward, right? We have this is 2016 going into 2017, right? A nice $60 move, $63 move on gold. Okay, we keep going back. You look year after year for the past decade. This is 2015 going into 2016, another $60 move on gold. Same thing, nothing changed, right? The last week and a half of December to the first week and a half in January, a big move on gold. Okay, same thing, 2014 going into 2015, right? 2013 going into 2014, right? It continues to happen even in these years when the market is a little bit more sideways and there wasn't really a continuation of that trend. Still a really good opportunity to capitalize. That's a $53 move that happened between the last week and a half of the year in the first week and a half. Okay, last week and a half and the first week and a half. And then same thing, this is 2011. Now, 2011 going into 2012 was a little bit different. The move didn't come until December 30th. And so that's why I think it's very important to be focusing on price action. I don't, my biggest tip with this seasonal trade here on gold, guys, is do not, just hop off this call here and, set a date in your calendar and say, okay, on December 20th, I'm buying gold no matter what. No, observe price action, because you guys can see, look around December 20th, right? We ended up creating a bit of an evening star right here, which is a reversal pattern, right? That's a 3 candlestick reversal pattern. And we saw that gold actually moved a bit lower, right? The better time to buy would have been off of this bottom, off of this bullish engulfing candle on December 30th. And know that we have a tendency to have that push, okay? So December of 2011 moving into January 2012, it's just a little bit different story. But again, we need to react to the price action around these dates, okay? So again, same thing, nice move at December of 2010 moving into 2011, okay? That is, and then again, 2009 moving into 2010, okay? If there's one thing, guys, that you take away from today, I know that there's probably a handful of new traders watching this, and you guys are looking for some tips. Focus on a strategy, okay? Focus on building a defined strategy, okay? If you find yourself just hopping in and out of trades and not knowing why you're getting into trades, you really need to take a step back and work on developing your strategy as a trader, okay? Back test, okay? Great example is like this. You see how I'm not just going back through 1 year of data, 2 years of data, 3, I'm going through 10 years of data just to kind of confirm my hunch that gold tends to have a bullish run at the end of the year. Now, let me drop some nuggets on you guys, okay? And also, this comes out from a big shout out to Ray in one of the lifetime members of Positive Traders in my private Discord. He went ahead and dropped a big knowledge bomb. Now, one of the reasons, okay, obviously, technically it looks really great, right? But we have to keep in mind that the charts, okay, let me just say this. Let me say this twice because I think it's so important that you guys understand this. That the charts, the candlesticks in the charts that move up and down and create these different patterns is just a visual representation of the world moving money around. Okay, it's a visual representation of countries and entities moving the money around. That's all price action is. That's all the charts are, right? So the only reason we have the charts is because of what happens externally outside of the charts. Okay, so Ray brought up a very good point, and I appreciate you, Ray, if you're listening to this right now. Big shout out to you, Ray, that companies, right, specifically U.S. companies, right, because we're talking about gold. This is spot gold, right? So this is XAU USD. So if gold goes up, that's because the U.S. dollar is weakening, right? And we tend to see the U.S. dollar lose a bit of ground towards the end of every year because, here it is, because companies want to protect themselves from the amount of taxes that they pay. So they tend to move their US dollars from their companies, their profits from their companies into offshore, whether they're shell companies, sister companies, whatever they are, to avoid the taxation, right? To squeeze and work around the tax laws. So that is one of the reasons why we see gold at the end of each year, the last week and a half, tend to have a nice push, is because we are looking at corporations and large entities moving their, essentially selling their US dollars in buying other currencies, wherever their banks are, whether that's in, Switzerland, right? We know Switzerland is a very strong banking system, right? Because of their being so anonymous, right? Anonymity, if I'm sorry, I'm jumbling my words around, but you guys know what I'm saying, right? They're very secure because of how anonymous they are. So, we see the Swiss franc, and that's one of the reasons why the Swiss franc is also a safe haven currency, right? We know that gold is our gold, silver, platinum, right? Our metals are safe havens, right? So in risk off environments, we see gold gold rise, right? And then that includes the Swiss franc and the yen also, okay? Now, let's talk about the vaccine very quickly, okay? Let's talk very quickly. Now, I'm not going to get into politics here, okay? We all know that this was an election year, right? I haven't done a webinar since the elections, so I'm not even going to get into politics whatsoever. But I do want to very quickly talk on the vaccine, okay? And again, it's not going to be anything opinions, it's just going to be facts, okay? Back on this drop, okay, on November 9th, 2020, right here, this big drop on gold, okay? The reason gold dropped in one day from 1950 all the way down to about 1850, almost a $100 drop in gold in one day, was the market moved to a risk-on environment, right? When we're in a risk-on environment, that's safe havens being sold. Now, why did we move into a risk-on environment? Why did gold drop $100? The reason why is because that is the day that Pfizer announced a 94% effective vaccine. Okay? Whatever your thoughts are on the vaccine, we aren't going to get into opinions on the vaccine, but whether or not, whatever your opinions are, just know that the market has a direct reaction to the coronavirus and the vaccine that is coming out, okay? And whether you like it or not, okay, there is a vaccine coming. And if you guys have not been keeping up with the news, okay, and I'm not saying turn on the TV channel. I think that watching TV, there's a reason they call it TV programs, right? Because in programming, right, right back to your regular scheduled programming, right? They are programming you. They are programming our minds, right? So I think watching TV is very toxic. I recommend reading your guys' news, getting it from the least biased sources that you can. But there are vaccines that are hitting arms tomorrow. Okay, tomorrow, just Friday. Friday, actually just about an hour and a half before midnight Eastern time, the FDA approved Pfizer, okay, to start distributing and administering these vaccines, okay? The U.S. government has bought about 100 million doses of these vaccines. They just ordered another 100 million, okay, so that's about 200 million. And they are going to frontline workers and people that are in need of them tomorrow. Okay, tomorrow morning, and they did that in such a way so that as we speak right now, there are millions of doses of vaccines on trucks, okay, on dry ice in almost -100 being chilled, okay, and they all have like tracking GPSs in the boxes and everything is being all regulated, and they are all being distributed to hospitals as we speak. They are all being prepared to be injected into people tomorrow morning, okay? And it's going to start off with the doctors and the nurses, right? They're going to be vaccinating themselves, and they're going to be vaccinating the people that are in the hospital and need it. And I think it's estimated that around by April of next year, April of 2021, anybody that wants the vaccine will be able to have the vaccine, okay? Now, what does this mean for the market? What does this mean for gold? Well, initially, I do think this week, guys, again, remember how I said that the dollar might find just a little bit of strength, a little bit of short-term strength before falling? Well, if that's the case, we may see gold drop a little bit more, okay? We may see a drop in gold tomorrow morning, okay? Also, another big company that has been fighting to release these vaccines, the company's name is Moderna, okay? There's a lot of other companies, right? Johnson & Johnson, J&J, like all these companies. Pfizer is the front runner for it right now. They're the ones that they're the first company with BioNTech that do have that approval. Okay, now the Moderna is seeking FDA approval for this week also. So this could lead into some good stock opportunities, guys. Okay, that is one other thing that I'm excited to begin to bring to the table with you guys. Is I have definitely started to dip into the equity market. Okay, I have started to dip into options in futures trading. So that's one of the beautiful things, right? Once you learn a skill set, right? Once you learn how to do technical analysis, once you learn how to do fundamental analysis, you can apply it to multiple asset classes, right? So where in another great example is crypto, right? Crypto has boomed. We're going to talk about crypto in just a moment, but I do want to kind of start to move through things because I don't want to drag this live session on for too long. That way the recording isn't too long. If you guys remember when I was ending these at the beginning of this year, I was trying to keep them around 30 minutes. So let's keep moving forward here, okay? So let's go ahead and see how the market reacts, but I will be expecting another drop on gold this week. Okay, and then you know what that means, guys, is that's going to give us a better place to buy gold at in about a week or two here once this price action, right? Once we hit those seasonals to buy gold. So again, just to make it very clear, short-term bias is to the downside on gold. We may see something like this happen. Okay, just to be very clear. Okay, moving into next year. Now, my long-term targets, guys, for next year is we're going to start off with 2,300. Okay, we're going to start off with the 2,300 level and see how that works out on gold. Also, I believe that this is the right around, the 161.8% extension level. So really nice area for us to be looking at buying gold into. And honestly, guys, gold has been free. Drop like a one in the chat or a fire emoji or a money bag emoji if you guys have been eating off of gold this year, because gold has had some really nice moves back in here in July. Really clean consolidation before a big run to the upside. Okay, back in here earlier, also late November, there was a really nice sell opportunity in here, okay, to the downside. So gold has been a pretty nice play this year. Okay, we can actually see that it took out the liquidity void from July. Okay, that's where we actually found the support at the end of November. So, you know, I've got this other liquidity zone down at 1650. We'll just have to see how much of risk the market is willing to take, right? The more risk, that means that we are taking short positions or long positions off, right? We're essentially you know, selling gold, right? So that is that. So the same thing goes for silver. I want to point out something on Euro USD, guys. I am bullish on Euro USD, okay? Obviously, I just told you guys that I am expecting the dollar index to continue weakening, and so that is some upside on Euro USD. Now, one thing that I just kind of want to point out for you guys, okay? This might blow some of you guys' mind. Again, this is kind of getting into like the voodoo technical analysis type of stuff, your non-traditional technical analysis, you know, what TradingView calls beyond technical analysis. And, you know, I might get some flack for this, but honestly, hey, you can't knock what works. So let's go ahead and I'm going to show you guys this. Everybody lock, oh, I see lots of ones, guys. That's awesome. Lock into what I'm about to show you. Again, this is a little bit non-traditional, so you know, y'all can make fun of me as much as you guys want, but it's crazy to see how aligned the markets are in terms of patterns and price action. So let me just show you guys what I'm talking about. So let's keep in mind these dates. Okay, so let's just know that it's the middle of 2011, okay, to the bottom here, okay, the middle of 2015. So almost 4 years exactly from us to move from these highs, okay, to these lows. Now, if we just briefly draw out what happened here, okay, we had a pretty big drop, we had a correction, okay, we had a drop, we made our low for 2012, right? Then we moved up and we consolidated. Okay, we consolidated for quite a while, and then we had a big drop on Euro USD. Okay, now bear with me, guys. Okay, here's what we're gonna go over. Let me delete that. All right, here it is. Now, if I was to imagine that this red line here is just like a body of water, okay, that you're looking at a reflection. If we start right here and we look at a big move to the upside, right? Big move to the upside, and then we have a drop, and then we have another spike to the upside. Okay, and then we drop a little bit, and then we consolidate down, and then we have a big spike up. Okay, now I know some of you guys are like, okay, what is he doing? None of this is making any sense, right? This is a mirrored image. Now here's the thing, guys. Let's go ahead and take this and move this to right here on Euro USD. Now notice, where is this? 2017. How many years was this? 2011 to 2015. 4 years, right? A 4-year move from the highs of 2011 to the lows of 2015. Okay, where were we? 2017. What year are we about to move into? We're about to be in 2021. Okay, so it took 4 years for the markets to start to make a move to the upside again. And now we are making that upside move on Euro USD. So I believe that this area, right, this area, these highs from 2014 is where we're going to expect to see Euro USD at, okay? I know for a fact we're at least going to make it to the 125 area next year, but depending on how quickly Euro USD decides to fall, I think we're going to see some massive upside on Euro USD this year. So be on the lookout for that, guys. Okay, we might see something like Euro USD do something like this. Okay, just a little bit of a correction down to this area, and then another spike up. Okay, so again, short term for this week, I am on the sidelines with the dollar because we're at such a high level. But if we do see a bit of a reversal on the dollar, which means Euro USD would make a reversal also, we can take a short-term sell on Euro USD, right? We can be looking for some day trades, some nice London, New York trades to the downside on Euro USD. But again, I just want to kind of, this is my first session back to you guys in a while. I'm not always going to go over, these super high outlooks, right? Generally, I'm going to just keep it for the week, but because it's been about 8 months since my last webinar with you guys, I do want to just kind of let you guys know where my head at is with things, okay? So that's Euro USD. The pound dollar, I am biased to the downside on the pound, right? I think we're going to see quite a bit of divergence this year between the pound dollar and the euro. And matter of fact, we've already kind of seen some divergence, right? The pound has had some pretty, some volatile moves around August to some highs, down to some very significant lows, while Euro USD pretty much stayed sideways during that time. So I know the US dollar is the quote currency on both of these pairs, but that doesn't mean that they have to do the exact same thing, especially if we get a no-deal Brexit. So I'm expecting a sell-off in the pound this week. Definitely be looking for short-term downside on the pound. We did have this nice, we did spike right above this previous liquidity zone. So I would definitely be looking for sells into Monday, Tuesday this week on the pound. Let's keep moving forward, guys. Okay. Khalil asks, could you explain to me why GJ jumped? So yeah, all pound pairs actually spiked up. Okay, just a little bit of support to the upside. Really, any good news that comes out for the pound right now is dramatically going to move the pound to the upside. We have seen Boris Johnson talk positively, but at the deepest level, he also is forecasting a no-deal Brexit also. So pound dollar, pound yen, pound Swiss franc, pound AUD, right? Pound NZD, pound CAD. All of these pairs have had a pretty significant spike to the upside, right? Euro GBP has spiked to the downside because the pound is in the quote place for this pair. So that is that. Now, I do want to finish off today, guys, by talking about Bitcoin for a moment, okay? Because obviously, from where we were back in March of this year, okay, when I did the last weekly outlook, we're at a much different place now. Okay, we were at the yearly lows when I did my last weekly outlook, and at the time we weren't really looking too much at crypto. Now we've seen the crypto has definitely found some popularity once again, because we are almost back at all-time highs, guys. I have the $20,000 level marked off. We have not quite broken that this year yet. The high of this year was November 30th, and we reached $19,915. For some reason, I've seen a bit of misinformation being spread online. We have not broken $20,000 this year yet, guys, okay? Some people were saying that the all-time high was broken, which it was, okay? The all-time high is is 19,000. Previously was 19,891, but we did break the all-time high, but we have not broken $20,000 yet. For some reason on CoinMarketCap, okay, if we do go to CoinMarketCap very quickly, it does for some reason show Bitcoin breaking 20,000. It says the all-time high is $20,089 on December was that December 17th. But according to, I mean, this is the feed from Coinbase, right? I guess it just depends on what exchange they're getting their feed from. But that, in my opinion, that's not correct. We have not broken $20,000 on a Bitcoin yet. Okay, we got very, very close in 2018 or 2017, and got very close the end of November, but it's still yet to break it. I'm gonna say some crazy things right now. Okay, some of you guys might disagree. Some of you guys might agree that the price of, and this is again my opinion, that I believe that Bitcoin will be at least $300,000, 300,000 US dollars by the year 2025. Okay, that's my opinion. Okay, guys, look at the monthly candle. Look at the monthly candle close in November. Okay, there is nothing, you really can't stop this train. There is way too much institutional investors in Bitcoin right now, in cryptocurrency. Whether you guys want to believe it or not, digital currency is the future. Okay, that is my outlook. Now, here's some fun facts. Big shout out to Jeff for this. Jeff, one of my buddies, Mr. Unemployable, he is a big crypto guy, made a lot of money in the crypto space. I have a lot of friends that have made a lot of money in the crypto space. I even did pretty well back in 2017 myself also, but he has really made a full-time living off of specifically cryptocurrency. And you know, there's some things that he put me onto, guys, okay? So let's not forget, okay, this year was the Bitcoin halving event, okay? So that is one reason that caused Bitcoin to skyrocket, okay? But there's going to be more halving events, right? Every 4 years, right? Every 210,000 blocks, which is roughly every 4 years, we see a halving event take place. Okay, and here is the fact. This is, you know, that 300,000 by 2025, that's an opinion, but here's the fact. You guys can go and look this up for yourself if you don't believe me. That by the year 2140, that's when the last Bitcoin will be mined. Okay, the last Bitcoin will be mined in the year 2140. Now let's just recap with Bitcoin very quickly. Okay, the circulating supply. So the total amount of Bitcoin mined right now, there is 18,570,325 Bitcoin. Okay, there's roughly at the current mining rate. Okay, with the current after the halving event, there's roughly 900 new Bitcoin per day that enter the market. Okay, that get mined and distributed amongst the miners every day. 900 Bitcoin. If you notice, the max supply, the most amount of Bitcoin there will ever be, is 21 million. So we are less than 2.5 million Bitcoin away from the last Bitcoin being mined. But that last 2.5 million Bitcoin, it's going to take over 100 years, guys. We aren't even going to be alive. I mean, maybe we'll be alive. Who knows what technology is going to look like? And maybe we'll be able to, you know, you guys have ever seen the show Westworld or anything similar, right? When maybe we'll find a way in our lifetime to, you know, download consciousness and we'll become cyborgs or something. Who knows, right? That's some far-fetched thinking. But realistically, right, we're probably going to be dead around that time, around the year 2140. So we aren't even going to be alive to see the last Bitcoin. And the reason why is because of the halving event, right? It's because every 4 years they make it harder and harder, half as hard from the previous 4 years to get a Bitcoin. So rather than 900 Bitcoin being distributed amongst miners every year, in the year 2024, we're going to see another halving event happen, right? And now there's going to be 450, right? And then 225, and then so on and so forth. And that's why it's going to take 108 years. Now, here's the exciting part, guys. Here is the exciting part, is that by the year 2032, okay, 12 years, or basically 11 years, right? We're basically in 2021. By the year 2032, 99% of Bitcoin will be mined. Okay? By the year 2032, the circulating supply will be 20,980,000, or I'm sorry, 890,000. Okay? There will only be 210,000 Bitcoin left. But it's going to take 108 years from the year 2032 to the year 2140. 108 years to mine that last 210,000. Okay? So I want you guys to start thinking about setting yourself up for the future. Now, you guys want to know a crazy statistic too? You guys want to know a crazy statistic? Is that here, all you need, okay? All you need, and I'll go ahead and type it right here, so you guys can see that I'm typing the right number, okay? By the year 2032, if you want to be in the top 1% of Bitcoin holders, okay, because 99% is going to be mined. The price of Bitcoin then might be over $1 million or more for one Bitcoin. To be in the top 1% of Bitcoin holders, you will only need to have 0.003 of a Bitcoin. That is all you need to have in your wallet to be in the top 1% of Bitcoin holders by the year 2032. Okay, my prediction is that over the next decade, there's going to be a slow transition from fiat currency to digital currency. Digital currency is going to be more and more and more pronounced. Okay, it's going to pick up a lot more mass adoption. It's going to become a lot more popular. And the thing is, the price of Bitcoin is going to be so high, and there's the supply for Bitcoin is going to be so high. The supply for Bitcoin is going to be so low, and the demand is going to be so high that the price is going to skyrocket. And we're going to be using coins like Ethereum and Ripple, okay, to do our transactions, and other, altcoins and stable coins and just other coins that are worth less. But Bitcoin is going to be, like the main revolving coin that everybody looks up to as the value of all the other coins. Okay, and I mean that's how it's been, right? So if you have not already, look at acquiring some cryptocurrency. Ethereum is a great opportunity right now. Okay, Ethereum is a great opportunity. It's at 50 cents. It's still way off. You know what's interesting is that Bitcoin is right back to its all-time highs, right around 20,000. Ethereum, it's not far, but it still is, it's still a good value. We're at $583 right now. The highest Ethereum ever was about $1,400, right? $1,419. You can see on the chart right here. Okay, so that's a great value too. But Ripple's at 50 cents. Okay, Ripple's highs is $3.30. So Ripple, I think, is a very good value right now in terms of gain that we can forecast to see in the future, right? Although it does go against the principles of what cryptocurrency is, right? A decentralized a community. Ripple is the most centralized token, right? It's owned by the banks, but that's even in my opinion, that's almost even more of a reason to own it if you really think about it. So I'm expecting these coins to do very, very well, even next year, right? I don't think it would be too crazy to say that once Bitcoin breaks 20,000, which it's going to, okay? And the reason why I know that Bitcoin is going to continue higher also is because if you guys look into something called covered calls, I would highly recommend you guys look into covered calls. It's a way that you can get not free money, okay, but it's a way that you can agree. A covered call is essentially you are agreeing to you can agree to sell your Bitcoin at a certain price, right? It's called a strike price, at a certain price on a certain date. Now, if it does not reach that price by a certain date, then you get to, and what happens is those buyers, okay, that you're selling to, these covered calls to, they are paying you a premium. And these premiums can be quite a bit. Okay, quite a bit of money. And it's essentially, and they give you that premium right away. You get that premium right now. So for example, let's say you had 1 Bitcoin. Okay, if you had 1 Bitcoin, and right now there's a good website. It's called LedgerX. Okay, and by the way, I'm not affiliated with LedgerX. I don't have an affiliate link to them. I have not paid, or they have not sponsored me to tell them in any way, shape, or form. Maybe next week I'll go into LedgerX and show you guys visually. But you can agree to one of the covered calls is to sell your Bitcoin in December of 2021 at $100,000. Okay, and the premium on that, I believe, is it's a couple $100. It might even be a couple $1,000. Okay, so if you enter into that contract, you say, okay, I'm gonna do this covered call at $100,000. The only way you lose out on this is that if Bitcoin goes way past $100,000. Okay, if Bitcoin goes to like $200,000, $300,000, you are forced to sell that coin by December. You are forced in December to sell that coin and to sell your Bitcoin at $100,000. Okay, that's the only way you lose out on a covered call, is if it greatly exceeds the expectation, right? Now, here's the cool part about covered calls, is that if price does not reach $100,000 by December of next year, then you get to keep your Bitcoin and you get to keep your premium. But here's the thing, is covered calls are a really great idea, because the premium, you get paid the premium immediately right now. If you had 1 Bitcoin right now, you can even do it with the smallest unit you can do it with is 1/100th of a Bitcoin. So if you even have 1/100th of a Bitcoin, you can go and you can go and trade a covered call on your Bitcoin for any time frame that you think that you want. And if Bitcoin does not reach that strike price by the date on your contract, then you get to keep all of the premiums that you were paid the day when you sold that covered call, okay, as well as you get to keep all of your Bitcoin. It's a very, very good method. And then you can take those premiums that you get today and now when you're doing those covered calls, and you can buy more Bitcoin with the premiums. So even if you have to sell your Bitcoin, let's say you have 1 Bitcoin, you do a covered call for $100,000 in December. Let's say it hits $150,000. Okay, cool. You lose out on that $50,000, but you've been able to buy more Bitcoin with the premiums off of those covered calls. So it's a really good idea. I see somebody in the chat, Jameson, you asked, what are your thoughts on staking crypto? To be honest, Jameson, and I have not looked too much into staking. Okay, I know Coinbase offers a little bit of staking, but to be honest, I feel like some of the coins that are being staked, they're so volatile that I know they can be attractive. They might say like 15% APR or APY or 20% APY, but in my opinion, I don't really, and this is just me, maybe I'm wrong about it, maybe I'm uneducated about it, that's okay, but my opinion is I don't really trust a lot of the staked coins, just because I've seen what's happened with the cryptocurrency as a whole, and really we're only seeing like the top cryptos really hang in there. Most of the coins have turned into, shit coins and hit pretty low valuations. So, Khalil, options for Bitcoins. Yes, it's exactly options for Bitcoins. There's a really great video, guys, and I learned this, and I don't want to like come onto this video say like I'm a genius. I figured out these covered calls. No, I do not take any credit for learning about these covered calls. Big shout out to Kamikaze Cash. Okay, if you search up on YouTube Kamikaze Cash, he has a really good video. I think it's his second or third most recent video that he's put out. He's the one that's in charge of the Wall Street Bets meme page. If you follow Wall Street Bets, really good fin meme page. So, but yeah, he's also a very intellectual person when it comes to investments. So I highly recommend you guys go check him out. Maybe I'll edit the description after this. So if you're watching the recording of this, check out the description. I'll leave a link to his channel below, or actually I'll leave a link to the specific video on covered calls below, because I think it's a genius method. Okay. So Cleo, in that also answers your question, Cleo. That's how I got into it. So I've been subscribed to this guy for a while, watched one of his videos, and it showed me how to do it. So I'm not some crazy genius that discovered covered calls. If anything, Mike is. So and Jameson, yeah, it's 50-50. Yes, that is one thing that he definitely talks about in the video is guys, you know, if you're one of these long-term people, and I myself fall into this category, if you're one of those people that thinks Bitcoin is going to be $1 million one day, then, you know, don't necessarily get into covered calls, right? I mean, it's a great way to possibly diversify some of your portfolio. So, but at the same time, it's also, you don't have to do, you know, like leap calls or leap options, you know, which is like a year ahead. You can do just, you know, short term. They have January calls. They have even calls or options expiring, you know, in the next week, you know, 2 weeks, that type of thing. So, but just be careful with options, guys. Options trading is it can be, you know, is very volatile. You know, I know it's like memed as kind of gambling, and it almost is in a sense, right? Because you're guessing whether the price is going to be above or below a certain strike price by a certain date. So, you know, unless you're really solid with your analysis, it can be looked at as a form of gambling, right? But at the end of the day, risk management is there to lean on. So, as a recap, guys, go ahead and leave any questions or comments that you guys have in the live chat. I'll try to get to them real quick, but let me just do a quick recap before we end off today. I am expecting the dollar index this week to find a little bit of strength, okay? We dropped out of a massive zone over the past, that we were forming for the past couple of months. Really haven't had much of a recovery yet, but it does look like we are going to have a bit of a recovery this week. Now, what will invalidate this? Let me say this. What will invalidate this dollar buy is that if we have a daily candle close below Friday's lows. Okay, a daily candle close below Friday's lows is going to invalidate my dollar buys, and I'm going to look for the dollar index to continue falling, okay? But that also means that I am short gold, okay? So I'm expecting gold to fall from here, okay? So definitely as we move into London and New York this week, I would like to see gold find a decline. Also tomorrow with the vaccines officially like being injected into people, and the vaccines really like, you know, picking up some hype. I would expect something similar to what happened on November 9th, right? The market continuing to move into a risk-on sentiment. So, you know, we're going to see a sell-off on these safe haven currencies, okay, guys? But guys, if you guys enjoyed today, please do me a huge favor, guys. Help me out with the YouTube algorithm so we can get this into more people's recommendeds on their YouTube playlists. And please smash that like button, guys. I'm really excited. And definitely, if you guys want me to start doing some, you know, maybe some possible live New York trading sessions, right? We're actually taking some live trades together during a very volatile time like London and New York, rather than just a weekly outlook and a forecast for the week. Go ahead and smash that like video. That way I know, you know, that you guys are interested in this type of content. And, you know, other than that, guys, I'm excited to be back. Thank you guys so much. I'm really excited for where things are moving into 2021. I appreciate all of you guys. I appreciate all the messages and the support that I've been getting from the community over the past, you know, 8 months since I've been gone. And yeah, I'm really looking forward to where things are headed in the new year. So thank you guys so much, and I'll see you guys same time next Sunday, 7 p.m. Eastern, for the next weekly outlook. And again, in Telegram this week for some great setups. The link to that is in the description below. Thank you guys so much, and have a great week trading, guys. Peace out, everybody.